What if I told you that most people who try trading aren't just set up to fail? They're practicing failure every time they open a chart, not because they're stupid, not because they lack discipline, but because no one ever taught them the truth. They were handed signals, but never a system. They were taught candlesticks, but never their own emotions. They chased profits, but never understood risk. And the worst part, they didn't even realize they were doing it, because they weren't just trading stocks. They were trading hope, and the market doesn't care about hope. You've seen it, haven't you? The Instagram screenshots, the TikTok gurus. Buy this now. Millionaire in 6 months. Just follow my trades. It all looks so easy until your account is bleeding and your confidence crushed. But what if I told you this? Swing trading is not a hustle. It's not luck. It's not hype. It's a learnable craft, a skill set, a rhythm. And once you understand it, you won't see charts anymore. You'll see patterns. You'll see probabilities. You'll see the market for what it really is. In the next 40 minutes, I'm going to walk you through a blueprint. A blueprint that will teach you how to think like a trader, not a gambler, build a plan that protects your capital, identify trades with real edge, not noise, and manage your emotions like a damn professional. No fluff, no BS, just what actually works. Because the truth is, you don't need more time. You don't need more money. You just need the right map. And if you stay with me until the end, you'll walk away knowing exactly how to place your first confident swing trade, without guessing, without fear, and without giving Wall Street your money ever again. Part 1. The Mindset Gap. Why Smart People Lose Money. Let me tell you about David, MIT engineer, $150K salary, the guy who could solve differential equations in his sleep. When he discovered trading, he thought, finally, something logical. Numbers don't lie. 3 months later, he lost $47,000. Not because the market was rigged, not because he was unlucky, but because he made the same mistake every smart person makes. He thought trading was an IQ test. Spoiler alert, it's not. It's an EQ test, emotional intelligence. See, David would analyze charts for hours, perfect setups, flawless math, then he'd enter a trade and watch it go red. What did he do? Moved his stop loss. Just needs more room to breathe, he'd tell himself, added to the position. Dollar cost averaging, he'd rationalize, held overnight. Tomorrow it'll recover. Sound familiar? That's not trading. That's negotiating with reality. And reality always wins. Here's the mindset shift that changes everything. You are not trading stocks. You are trading your beliefs about the market. And if those beliefs are wrong, even slightly, your money will vanish faster than your confidence. Think about it. What do most people believe? I need to win most of my trades. Wrong. Pro traders win 40% and still bank. Losing money means I failed. Wrong. Losing is literally part of the business model. I have to catch every opportunity. Wrong. FOMO is how accounts die. I'm only successful if I'm right. Dead wrong. You're successful when you follow your system. But here's what the pros believe. Losing is not failure. It's feedback. I don't predict. I react. My edge isn't being right. It's being consistent. Every loss is tuition for the next win. See the difference? It's like dating. You don't marry everyone you meet. You filter. You protect yourself. You learn what works. And sometimes you walk away. That's not failure. That's intelligence. So before you open another chart, try this 5-minute ritual I call failure rehearsal. Close your eyes. Visualize placing a perfect trade. See it turn red immediately. Feel that punch in the gut. Now breathe. Ask yourself, what would a professional do? They'd check if the setup is still valid. If yes, they'd wait. If no, they'd exit. No drama, no revenge, no spiral, just business. Do this every morning. Why? Because when real loss comes, and it will, you won't panic. You'll execute, like you've been there before, because in your mind, you have. Remember, the market is a transfer mechanism. It transfers money from the emotional to the prepared. Which one will you be? Part 2. The Trader's Toolkit. What you really need and don't. Picture this. John from Texas spent $15,000 on his trading setup. 6 monitors, Bloomberg terminal, every indicator known to mankind. 3 months later, broke. Meanwhile, Sarah from Seattle trades from her MacBook at Starbucks. 1 screen, 3 indicators, her account up 47% this year. The difference? John collected tools. Sarah mastered basics. Because here's the truth. More tools create more confusion. More confusion creates more mistakes. More mistakes create more losses. It's like trying to learn guitar by buying 20 pedals before you can play a C chord. Doesn't work. So let's strip it down to what actually matters. Here's your real toolkit. First, a broker. Not the fanciest, the most reliable. Think TD Ameritrade or Interactive Brokers. You need 3 things. Fast execution, because seconds matter. Real stop losses, not mental ones. And low fees, because they compound. If your broker has these, you're golden. If not, switch today. Second, one charting platform. TradingView, that's it. Free version is fine. Set your chart to daily candles, not 5-minute. Why? Because swing trading is like fishing. You're not splashing around trying to grab every minnow. You're waiting for the big fish. And big fish don't show up on 5-minute charts. Add only 3 things: volume bars to see conviction, 20 and 50-day moving averages for trend context, and RSI for extremes. That's your entire technical setup. Shocking, right? But complexity is the enemy of execution. Third, a screener. This is your hunting rifle. Finviz.com, free version. Filter for price, $10, $100. Liquid enough to trade, not too expensive. Volume over 1 million, so you can exit when needed. Price above 50-day MA, momentum is your friend, and relative volume over 1.5, something's happening. This turns 7,000 stocks into maybe 20. That's manageable, that's tradable. Finally, the most important tool, a journal, Google Doc, Notion, even a notebook. Every trade gets logged, what you traded, why you entered, what happened, how you felt, what you learned. This is your edge factory, because patterns emerge when you track, and tracking beats hoping every time. Here's what you don't need. Level 2 data, you're not scalping. News feeds, they're all noise. Discord groups, echo chambers, fancy algorithms, they don't work. Multiple monitors, one is enough. Think of it like cooking. Gordon Ramsay could make a Michelin meal with 1 pan and 3 ingredients, while amateurs fill their kitchen with gadgets and still burn toast. Be Gordon, master the basics. The fancy stuff comes later. Or never. Because once you realize how simple profitable trading really is, you'll never want to complicate it again. Part 3, Trade Only This, How to Pick the Right Stocks. True story. Mike had 47 stocks on his watch list. He'd spend 3 hours every morning analyzing each one. Paralysis by analysis. His results? Mediocre at best. Then he met a prop trader who changed his life with 1 sentence: trade the same 5 stocks for 90 days. Mike thought he was joking. He wasn't. See, amateurs think variety equals opportunity. Pros know focus equals mastery. It's like dating 50 people versus actually getting to know someone. Depth beats width, always. So, what makes a stock worth your time? Think of it like choosing a dance partner. You want someone who moves with rhythm, volatility, shows up consistently, volume, follows the music, trends, and doesn't step on your toes, predictability. Let me get specific. The perfect swing trade stock has 6 qualities. First, liquidity. At least 1 million shares daily volume. Why? Because when you need to exit, you can. Low volume stocks are like crowded elevators. Easy to enter, nightmare to leave. Second, movement. You want 3 to 5% swings every few days. Not 20% moonshots, too dangerous. Not 0.5% crawlers, too slow. That sweet spot where profit meets sanity. Third, clean patterns. Pull up the daily chart. Can you see clear waves, higher highs and higher lows? Or does it look like a drunk person drawing? You want the waves, always the waves. Fourth, a story, not hype, a real catalyst. Earnings growth, new product, industry tailwind. Something driving the movement besides some guy on Reddit said so. Fifth, the Goldilocks price, 10 to 100. Under $10 attracts gamblers and manipulation. Over 100 gets institutional and news flow dependent. The sweet spot is where retail and institutions dance together. Sixth, relative strength. When SPY drops 1%, your stock drops 0.5%. When SPY rises 1%, your stock rises 2%. It's stronger than the market. That's what you ride. Here's your homework. Open Finviz right now. Set these filters, price 10 to 100, average volume over 1M, price above 50-day MA, relative volume over 1.2, and pick technology or healthcare sector. You'll get maybe 15-20 results. Now the real work. Open each chart. Ask, would I date this stock for 5-7 days? Look for smooth trends, not choppy mess. Note which ones have earnings soon. Avoid those for now. Save the 5 cleanest movers. That's your starting lineup. Here's the mindset shift. You're not trying to catch every move in the market. You're trying to master every move in 5 stocks. Because when you know a stock's personality, how it acts at support, how it breaks resistance, how it responds to volume, you stop guessing and start knowing. It's like the difference between a tourist with a map and a local who knows every shortcut. Be the local. Part 4. The Holy Trinity. Entry, stop, target. Picture this. 2 traders see the same breakout. Trader A jumps in thinking, this is it. No plan, just hope. Trader B waits for the candle to close, calculates his risk, sets his stop, defines his target, then enters. Same setup, same moment. But here's what happens next. The stock pulls back 2%, normal wiggle. Trader A panics. What if it keeps falling? Moves his stop lower. The stock drops another 1%. Trader A adds more shares. Averaging down, he mumbles. The stock bounces back to his entry. Relief floods in. Then it drops 5% on heavy volume. Trader A finally exits. Loss $500. Trader B, his stop was at 2.5%. He's already out. Loss $50. He's scanning for the next setup, while Trader A is still processing what happened. That's the difference between trading with the Holy Trinity versus trading on feelings. Let me break down each component entry. The moment of truth. Your entry isn't when you feel it's going up. It's when the market proves it's going up. Example, stock consolidating at $50 for a week. Your entry, not at $50.01 because you're impatient. It's at $50.75 when it breaks with double average volume. Why? Because now you have confirmation. Real buyers showed up, not your imagination. Stop loss, your insurance policy. Here's what no guru tells you. Your stop loss is not about money. It's about logic. Wrong. I'll put my stop where I can afford to lose. Right? I'll put my stop where my thesis is proven wrong. Example. You buy the 50.75 breakout. Your stop goes at 49.50, below the consolidation low. Why? Because if price goes there, the breakout failed. Your idea was wrong. Get out. No ego, no hope, just math. Target. The graceful exit. Most traders have no exit plan. They ride winners until they become losers. Pros, they sell into strength. Example, resistance at $54 from 3 months ago. That's your first target. Risk $1.25, 50.75 entry, $49.50 stop. Reward $3.25, 54 target, 50.75 entry. Ratio 2.6 to 1. That's a professional trade. Here's the game changer. Write this Trinity before you trade, on paper, in your journal. If XYZ breaks 50.75 on volume, I'll buy with stop at 49.50 and target at $50. Now you're not trading. You're executing a pre-written script, like an actor who knows their lines. The market throws surprises? Doesn't matter. You know your role. Try this exercise. Find one setup from your watch list. Write the complete Trinity. Entry trigger, stop level, target zone. Don't place the trade. Just watch what happens. Did it trigger? Hit the stop? Reach the target? Do this 10 times. You'll start seeing the market differently, not as chaos, but as probability patterns waiting for your prepared response. Part 5. The A+ setup when to actually trade. Meet Lisa. She took 3 trades last month, made $2,400. Her friend Tom, he took 47 trades, lost $100. Same market, it was same month, different approach. Lisa trades like a sniper. Tom trades like a machine gun. Guess who sleeps better? Here's what separates them. Lisa only takes A+ setups. Tom takes anything that moves. It's like fishing. Tom throws his line every time he sees a ripple. Lisa waits for the big shadow under the perfect conditions. One goes home with minnows and frustration. The other lands the prize catch. So, what exactly makes a setup A+? Think of it as a 3-layer filter, like dating apps, but for trades. Layer 1, the pattern. Is this a clean, recognizable setup? Breakout from a tight range? Bounce off major support? First pullback in a new uptrend? If you have to squint and convince yourself, it's not A+. The best setups scream at you. Even the perfect woman at the wrong time equals disaster. Same with trades. Is the overall market supportive? SBI trending up helps long trades. Is the sector hot? Trading tech when tech is dead? Which ear pain? Any major catalysts coming? Earnings, Fed meetings, the ROMs, wild cards. You want alignment, like wind at your back. Layer 3, the confirmation. This is where patience pays. You see the setup. Context is good. Now what? You wait for the market to prove it. Volume surge on breakout? Check. Strong close above resistance? Check. Follow through the next day? Check. That's an A+ setup. Here's the mindset shift. Every B+ trade you skip protects your capital for the next A+. It's not missing out. It's quality control, like saving your appetite for the 5-star restaurant instead of snacking on fast food. I'll share something that changed my trading forever. I started keeping 2 journals, trades I took and trades I skipped. After 30 days, I compared results. The skip journal would have lost money 80% of the time. The trades I took, 65% winners. Why? Because forcing myself to write why I was passing created a filter. My subconscious learned the difference between good enough and excellent. Try this for 1 week. Before entering any trade, rate it. Pattern, 1 to 10. Context, 1 to 10. Confirmation, 1 to 10. Only trade, 8+ average scores. Watch what happens to your results and your stress levels. Because here's the secret. The money isn't made in the trading, it's made in the waiting. A+ setups are rare, maybe 2-3 per week. But when they appear, you execute with conviction, no hesitation, no doubt, just pure prepared action. That's how you trade like Lisa, not Tom. Part 6, the secret sauce, trading plans. Let me tell you about 2 heart surgeons. Dr. Smith walks into surgery, looks around, and says, "Let's see what happens." Dr. Johnson, she has every step mapped, every tool prepared, every contingency planned. Who would you want operating on you? Yet most traders act like Dr. Smith with their money. They wake up, check some charts, and see what happens. Then wonder why their account flatlines. Here's the uncomfortable truth. Your trading results are determined before the market opens. In the planning, not the clicking. I learned this the hard way. Lost $15,000 in my first year trading. Not because I couldn't find good setups, but because I had no process. I was playing jazz when I needed to be playing classical. Free form when I needed structure. Everything changed when I met a hedge fund trader at a conference. He showed me his daily plan. 1 page, bullet points, boring as hell. His returns, 40% that year. "The plan is my employee," he said. "It works while I supervise." That shifted everything. A trading plan isn't restriction, it's liberation. It frees you from decision fatigue, from emotional hijacking, from the chaos of the moment. Here's the exact template that transformed my trading. Market context. 2 sentences. SPY trending up, above all, MAs. Tech sector showing relative strength. That's it. Not a dissertation, just awareness. Today's focus. 3 stocks maximum, not 20, not 10, 3. With specific setups in mind. AAPL, watching for break above 150 on volume. NVDA, pull back to 20 MOI around 270. TSLA, consolidation, need daily close above $240. The trade plans for each stock before the market opens. Entry trigger buy XYZ at $50.25 if hourly closes above. Stop placement 48.75 below yesterday's low. Target zones. First target 52, previous resistance. Final $54. Position, size 100 shares with $150 risk, or 1% of account. Mindset. Check 1 word. Seriously. Anxious, confident, tired, focused. Why? Because trading tired is like driving drunk. You need to know your state. Invalidation rules. What makes you skip the trade entirely? If SPY gaps down 1% plus, no new longs. If stock opens above entry, wait for pullback. If unusual volume pre-market, reassess. This takes 10 minutes to write, but it saves hours of anxiety. and thousands in impulse trades. Here's what happens when you trade with a plan. You stop checking your phone every 5 minutes. You know exactly what you're looking for. The market either gives it or doesn't. You stop forcing trades. The plan says, wait, you wait. You stop moving, stops. The plan said 48.75, it stays there. You stop chasing, miss the entry, next opportunity. You start sleeping. Because you did your job. The market does theirs. I'll share a story that drives this home. Sarah, one of my students, was a chronic overtrader, a 5 to 10 trades daily, bleeding slowly. I made her commit to written plans. First week, this is stupid, I know what I'm looking for. Second week, okay, I'm seeing patterns in my mistakes. Third week, I only took 4 trades, made more than the previous month combined. Why? As the plan forced her to think before acting, to commit before clicking, to be intentional instead of reactive. Your practice starting tomorrow. Write one trade plan tonight, just one. Watch that stock all day tomorrow. Execute only if your trigger hits. Journal what happened. Do this for 5 days. By day 5, you'll never trade without a plan again, because you'll finally understand the money is made in the preparation. The clicking is just administration. Part 7. Avoiding death by 1,000 cuts. Risk management. True story that still haunts me? Robert was a software engineer, smart guy. Started with $50,000. 6 months later, $2,800 left. He didn't blow up on one trade. He bled out on 200 small ones. $100 loss here, $200 there. No big deal, he'd say. Like saying just one cigarette 200 times. The account cancer spread until terminal. Here's what Robert never understood. In trading, you don't die from the sword. You die from the paper cuts. Let me paint you a different picture. Anna started with $5,000. 2 years later, $38,000. Her secret? She never risked more than $50 per trade. Boring, you might think. Brilliant, her bank account replies. Because Anna understood the math that most ignore. Lose 50% of your account. You need 100% gain to break even. Lose 10%. You need 11% to recover. Stay in the second category. Always. Here's the framework that keeps you alive. The 1% rule, your trading seatbelt. Never risk more than 1% per trade. $10,000 account, 100 max risk. $100,000 account at $1,000 max risk. But that's so small. Good. Small losses are recoverable. Large ones are terminal. Think of it like alcohol. 1 drink, fine. 10, hospital. Trading risk works the same way. The position size formula, your protection calculator. Here's the only math you need. Position size, Yao, account X 1%, Yao's entry, stop loss. Example, $10,000 account, 1% risk. Yam, 100 risk per trade. Stock entry $50, stop loss 40 risk. Per share, $2. Position size, 100, $2.50 shares. That's it. No emotion, no guessing, just math. The recovery mindset, your psychological armor. Here's what changes everything. Stop thinking about risk as loss. Start thinking about it as research funding. Every trade costs you 1% to run an experiment. Win, great data. Lose, still great data. You're not losing money. You're buying market education. And unlike college, this education pays you back. I learned this from a poker pro turned trader. He said, in poker, you pay to see cards. In trading, you pay to see if your edge works. Both are just information costs. That reframe changed everything. Suddenly, losses didn't sting. They informed. Here's a drill that builds risk discipline. The 20 trade challenge. Trade with strict 1% risk for 20 trades. No exceptions. No, just this once larger positions. Track results. Here's what typically happens. Trades 1 to 5 feels restrictive. I could make more. Trades 6 to 10. You notice you're still in the game. Trades 11, 15 losses don't hurt. Winners feel good. Trades 16, 20. You realize you're actually UP, because when you control risk, profits handle themselves. Like driving with a speed limit. Feels slow, keeps you alive, gets you there. Here's the truth. Bomb. Professional traders aren't better at picking winners. They're better at controlling losses. They don't avoid risk, they portion it. Like a chef with salt. Too little, bland results. Too much, ruined dish. Just right, magic. Your new mantra. I'm not here to get rich on one trade. I'm here to be trading in 10 years because longevity beats lottery tickets every single time. Part 8. The Psychology Loop. Winners think in losses. Want to hear something crazy? The best trader I know celebrates losses, not wins. Losses. His name's Marcus. Hedge fund guy. Returns that would make your eyes water. After a winning trade, he barely reacts. Nice, he'll say, then moves on. But after a loss, he lights up, gets excited, starts taking notes. Beautiful. Look at this failure, so clean, so educational, he'll say. Like a scientist who just discovered something new. First time I saw this, I thought he was insane. Now I realize he's genius. Because Marcus understands what 99% miss. Losses are your real teachers. Wins just confirm what you already know. Think about learning to ride a bike. When did you learn more? When you cruised straight, or when you wobbled and fell? The wobbles taught balance. The falls taught consequences. The fear taught respect. Same in trading, every loss carries a lesson, but only if you're listening. Here's how to rewire your brain. Like Marcus Step 1, reframe the loss. Old thought, I lost $100. I suck at this. New thought, I paid $100 for this lesson. What did I learn? It's not semantics, it's survival. When you see losses as tuition, not failure, you stop hiding from them. You start studying them. Step 2, the 3-question debrief. After every loss, ask, was this a good trade with bad outcome or bad trade? If good trade, nothing to fix. Probability played out. If bad trade, what rule did I break? What emotion took over? What will I do differently? Write the answers every time. This turns pain into progress. Step 3, the win-loss. Journal flip. Most traders journal wins in detail, losses quickly. Flip it. Wins get one line, followed plan, worked. Losses get paragraphs. Entered early due to FOMO. Need to wait for confirmation. Emotion. Anxious about missing out. Solution. Set alerts. Walk away until trigger. Why? Because you don't need to study what's working. You need to fix what isn't. Here's a story that drives this home. Jessica came to me frustrated. I win 60% of my trades but barely make money. We reviewed her journal. Her wins averaged $200. Her losses, $400. She was so afraid of being wrong, she let losses run and cut wins short. Classic psychological trap. I gave her one rule. For 30 trades, your stops are cement. No moving, no hoping. Just honor the stop. First week was hell. I got stopped out right before it turned around. Good, I said. You followed the plan. Week 2, something shifted. She stopped watching losing trades after exit. Week 3, the magic, her losses stayed at $200. But her wins, now held with confidence, averaged $500. Same win rate, triple the profits, all from accepting losses instead of fighting them. Here's your practice. The loss, acceptance ritual. Before your next trading session, write this: I will lose trades today. That's normal, that's expected, that's professional. My job is not to avoid losses. My job is to manage them. Each loss brings me closer to the next win. I am paid to execute, not to be right. Read it aloud. Yes, really. Because when the loss comes, and it will, your brain won't panic. It'll think, ah yes, we prepared for this. That's the difference between amateurs and pros. Amateurs are surprised by losses. Pros schedule them. And that small shift changes everything. Let me tell you about 2 traders, both smart, both motivated, both started same year. Tom reads every trading book, watches every YouTube guru, tries every strategy. His results? Random, like throwing darts blindfolded. Sometimes hits, usually doesn't. Never knows why. Sarah? She does the same 3 things every single day. Boring, repetitive, mechanical. Her results? Consistently profitable for 3 years straight. The difference isn't talent, it's routine. Because trading success isn't built in the exciting moments. It's built in the boring daily repetitions that compound into expertise. Here's Sarah's exact routine that turned her from break-even to 6 figures. Morning ritual, 15 minutes. 6:30 a.m., coffee, same chair. Same screen, check 3 things. SPY direction, her 5 core stocks. Any overnight news that matters. Not Twitter, not CNBC, not Discord channels, just raw data. Then she writes 1 sentence: market feels Kbarik today. That's it. This primes her brain for awareness, not action. Trading hours, ritual. She has 3 rules written on a post-it above her monitor. Trade the plan, not the screen. Losses are tuition, not failure. When in doubt, stay out. She reads these before placing any trade. Sounds silly? Her win rate jumped 15% after starting this. Because reminders work when emotions surge, she only watches her positions at specific times: 10 a.m., 12 p.m., 2 p.m., 3:30 p.m. The rest, she's living life. Gym, work, family. Because staring doesn't help. Planning does. Evening review. 20 minutes. This is where the magic happens. 4:30 p.m., same chair, same process. 3 questions. What did I do right today? What did I do wrong? What's one thing I'll improve tomorrow? Then she logs every trade entry reason, exit reason, emotion felt, lesson learned. After 100 trades, patterns emerged. I lose most when trading before 10 a.m. Solution. No trades first, 30 minutes. I win most on pullback setups. Solution. Focus there, ignore breakouts. I revenge trade after stops. Solution 1, trade per stock per day rule. Your brain is a pattern recognition machine, but only if you feed it consistent data. That's what routines do. They create data sets from chaos. Here's what happened to my trading after installing routines. Month 1 felt robotic and restrictive. Month 2, started seeing my bad patterns clearly. Month 3, naturally avoided previous mistakes. Month 6, trading became automatic. Good habits just happened. Month 12, best year ever with less screen time, because routines remove decision fatigue. You stop wondering, what should I do? You just execute the checklist, like a pilot. Same pre-flight check whether flying to Vegas or Vermont. Here's your assignment, the 21-day routine. Challenge, pick 3 things. 1 morning ritual, 5 to 10 minutes. 1 trading hours rule, written visible. 1 evening review habit, 10-15 minutes. Do them for 21 days straight. No excuses, no modifications, just repetition. Day 1 to 7 will feel forced. Day 8-14 will feel normal. Day 15-21 will feel necessary. By day 22, you won't be able to trade without them. That's when you know you've turned pro. Because amateurs rely on motivation, professionals rely on systems, and systems beat feelings every damn time. Part 10. The ultimate truth. This is not a hustle. We need to talk about why you're really here. It's not about the money, not really. Sure, money brought you to this video, but something deeper keeps you watching. You're tired of the lie. The lie that says success comes from shortcuts, from magic indicators, from following the right guru, from catching the next meme stock. You've tried that. It's exhausting. It's empty. Even when you win, you feel like you're losing. Because deep down, you know you're gambling, not building. I see it in every new trader's eyes. They don't want to get rich. They want to feel capable, in control, professional. They want to look at a chart and see opportunity, not chaos. They want to place a trade with confidence, not prayer. They want to build wealth systematically, not accidentally. That's what brought you here, and that's exactly what swing trading offers, but not as a hack, as a practice. Think about what you've learned. You've discovered that losses aren't failures, they're feedback. You've learned that simple beats complex, every time. You've seen that discipline beats intelligence, always. You've understood that process beats outcome, eventually. This isn't just trading wisdom, this is life wisdom, because the market is the ultimate mirror. Every fear shows up. Every bad habit gets punished. Every shortcut leads to pain. But also, every discipline gets rewarded. Every patience pays off. Every process compounds. The person who masters swing trading doesn't just build wealth, they build character. They become someone who can see patterns where others see chaos, stay calm where others panic, execute when others hesitate, learn from pain instead of avoiding it. That's the real transformation, not the account balance, the person holding the account. I'll leave you with this story. 5 years ago, Maria was a teacher, stressed, underpaid, trapped. She found trading. Lost money for 2 years trying to get rich quick. Then something shifted. She stopped chasing and started building. 1 setup mastered, 1 routine installed, 1 rule followed, day after day. No shortcuts, no excitement, just process. Today, she still teaches, but part-time, by choice. Her trading account covers the bills, but more importantly, she's different, confident, calm, in control. Trading taught me to trust myself, she told me. Not the market, not the gurus, myself. That's the ultimate truth. This journey isn't about beating the market. It's about building yourself into someone who can, someone who thinks in probabilities, not certainties, who manages risk, not avoids it, who executes systems, not emotions. That person doesn't just succeed at trading, they succeed at life. Because the skills transfer, the mindset multiplies, the discipline compounds. So yes, learn the setups, build the routines, follow the rules. But remember why? You're not just building a trading account. You're building a better version of yourself. One trade at a time, one day at a time, one lesson at a time. The market will test you, shake you, tempt you. That's its job. Your job, show up tomorrow and the next day. And the next, with your plan, with your discipline, with your commitment to the process, because in the end, that's what separates those who make it from those who don't. Not talent, not luck, not secrets. Just showing up and doing the work, day after boring day, until boring becomes profitable, until profitable becomes predictable, until predictable becomes your new normal. That's not a hustle. That's mastery, and it's waiting for you. From knowing to doing. So here we are, 10,000 words later. Your mind is full. Your notebook has pages of insights. But let me tell you, a harsh truth. Information without implementation is just entertainment. You can watch 1,000 trading videos, read every book, follow every guru. But until you place that first disciplined trade, until you honor that first stop loss, until you journal that first lesson, you're still just a spectator. The gap between knowing and doing is where dreams die, but it's also where professionals are born. So let's bridge that gap. Right now, not tomorrow, not when you're ready, right now. Here's your immediate action plan. The first 48 hours. Hour 1 to 2, set up your infrastructure. Open TradingView, free version is fine. Create a watch list labeled Training Wheels. Add 5 stocks from the screener criteria we discussed. Just 5. This is your universe for the next 30 days. Hour 3-4. Create your trading journal. Google Doc, Notion, physical notebook. Doesn't matter. Title it My Trading Transformation. Write your why. Why are you doing this? What do you want to become? Be specific. Be honest. This is your North Star when things get tough. Day 2 morning. Write your first trade plan. Pick one stock from your list. Define entry, stop, target. Don't place the trade. Just watch. Did it trigger? Hit target? Stop out? Log what happened. Log how you felt watching. This is practice without pressure. Day 2. Evening review and reflect. What did you notice? What surprised you? What would you do differently? Write it down. This is where growth begins. The next 30 days. Week 1, paper trade only. 5 trades maximum. Focus on following your plan perfectly, not making money. Week 2, 3. If you followed your plan in week 1, use small, real money. Risk only 0.5% per trade. Yes, half the normal. This is training, not earning. Week 4, full 1% risk, but maximum 10 trades for the month. Quality over quantity. Every weekend, review all trades. Look for patterns. What's working, what's not. Adjust. But slowly, no dramatic changes. Evolution, not revolution. The 90-day checkpoint. By day 90, you'll know if you're built for this, not by your profits, by your habits. Are you following your routines, honoring your stops, learning from losses, staying disciplined when it's boring? If yes, you're on the path. If no, that's okay too. Not everyone is meant to trade, but everyone can learn what trading teaches: discipline, patience, risk management, emotional control. These skills pay dividends in every area of life. Share your commitment. Right now, in the comments below, write day 1. One specific thing you'll do today. Maybe it's set up TradingView. Maybe it's write my why. Maybe it's create my watch list. Doesn't matter what. Matters that you start. Because public commitment creates private accountability. Find your tribe. Trading is lonely, but it doesn't have to be. Find one person learning too. Share your journals weekly. Not to compare results, to compare process, to stay accountable, to remember you're not alone in this. The truth about your future. A year from now, you'll be one of 3 people. The one who never started, still watching videos, still preparing, still waiting for the right time. The one who started and quit, tried for a month, hit some losses, decided it was too hard or rigged, moved on to the next shiny object. The one who started and stayed, took the losses, learned the lessons, built the habits, now trading with calm confidence, making consistent profits, living with less stress. Which one will you be? The market doesn't care about your decision, but your future self does. So, make them proud. Start today, start small, but start. Because the best time to plant a tree was 20 years ago. The second best time is now. Your trading journey begins with the next click. Make it count. Welcome to the 1% who actually do what they learn. See you in the markets.